Okay. The Crypto Jedi says, if you can do only one yield farming opportunity that you have shown us, which one would you do? I'm a new Token Metrics member as well. Oh man, that's what's up.
We
Customer
just
in the
landed on
house.
the moon in
I
the
love
Lambo.
it. Thank you for being a customer. Okay, what do you do with liquidity tokens they give you on 1inch? Okay, yeah, good question, right? So let me just kind of go through that again. So what you do is, so let's say 1inch exchange, they add a new trading pair. Basically, let's say ETH and Tornado, right? I'll do Tornado because I've been doing that one a lot recently. Okay, so let me pull this up here. So Tornado actually is, first of all, very bullish on that project, as I mentioned before. So where's 1inch? I went to 1inch. That first day or so when they launched, the APY was over, I think it was like 283%. So, but obviously it's now decreased to 70%. But hey, not bad. Beats the savings account. Beats just having those torn tokens in my wallet doing nothing. So I come here and I add liquidity here. So to incentivize you to provide liquidity on the DEX, because 1inch exchange, SushiSwap, Uniswap, they're exchanges, they're decentralized exchanges, and they need liquidity because they follow what's called an automated market maker model or principle, right? So to do that, they need us to add liquidity that people can use to trade with, right? So by me adding Tornado and Ethereum into the pool, other people can come and buy and sell. I'm adding liquidity for that. Now, I do take the risk of impermanent loss, meaning that going through, like let's say Tornado Cash goes up 500%, I'm better off just holding as opposed to having that sold into Ether. But on the other hand, right, to incentivize you to still do that despite that risk. Where was that image? This image, right? So let's say Tornado goes up 500%. I lose 25% just by being in that liquidity pool. That's what's called impermanent loss. But to incentivize you to still add liquidity, that's why the APY is high. So 1inch says, okay, anybody who adds liquidity to this trading pair will give you 70% APY in 1inch tokens. So meaning if you add $100,000 worth so basically 50 grand of ETH, 50 grand in Torn equals 100 grand, we'll give you $70,000 over 1 year if you add that liquidity for 1 year. And 70 grand in 1inch exchange tokens. That is good money, right? Despite the impermanent loss, right? That's why, to me, impermanent loss is not really an issue if you're finding good projects that have good yield farming rewards. It's a moot point, especially if 1inch token can do a 10x. That's 70 grand to 700 grand. I mean, that's how we make money. That's how we get crypto retirement, crypto rich. So that's basically the approach. So these exchanges give you incentives. So what you do is, before even doing this, right, because you have to deposit ETH Torn tokens. And you're like, what the hell is that? So you have to go to the pool here and you put in ETH and Torn, and here's the pool, right? So you then add liquidity. So in this case, I've added 50 grand of liquidity. And when you add liquidity, they give you an LP token, a liquidity pool token for this pair, right? So if you go to your Ethereum wallet, it appears there. Once you have that LP token, you then take that to farming and you stake that here. So you come here, right? It says deposit one. So in this case, it's called 1LP-ETH-Torn. That's the LP token. So you deposit that there. Once you do that, then you start earning this APY. And whenever you want to get out, just come here. You can just claim your tokens. Let's say you don't want to get out, but you want to claim the tokens. Let's say I want to sell. So let's say I want to sell my 1inch. I have 7 grand I've earned in less than a month. Let's say I want to pay my rent, but not something I would do. But let's say you wanted to do that, right? You come here, claim the token. Then you pay the gas fees. That's the other downside. But let's say gas fees are $400, $500. That's still over 6 grand you've earned in less than a month. And tokens you already had in your portfolio that you already believed in long term. So this is like passive money. Well, let's say you want to completely withdraw everything, right, and get out of the liquidity pool. Then you come here and withdraw. So that's the strategy. Sorry, I forgot what other part of the question was. But basically, that's it, right? That's liquidity mining, liquidity pools. you first add liquidity, you get an LP token, then you farm that. Now I do everything through MetaMask and through Ledger. So typically you have to do multiple transactions. So you have to deposit. So coming here, you deposit. Let's say I wanted to add more. I have to first unlock these tokens and give 1inch access to them. So this will be one transaction for ETH, then one for Torn. But I've already done this already. So this is why it's not appearing this for me. But let's say I wanted to do a new pool. Let's say I got into perp actually. Yeah, there's no pool for that. What pool don't I have? Let's say I have wrap Bitcoin and ETH, right? So the LP pools also give you tokens as well. They also give you APY on this. So in this case, let's say I had wrap Bitcoin. I'll come here, unlock it, giving permission to this DApp, 1inch exchange, to access my wallet. That's one transaction. Then also do this additional transaction to then deposit the liquidity, one for DAI, one for WBTC, one for ETH, and then get that token, the LP token, and then take that and then deposit that there. So lots of transaction, lots of fees, but it can be very lucrative, right? So that's why it's the talk of town, or talk of crypto. Right. Okay, I'm sorry. So the other part of the question was if I can only do one. Okay. Sorry. So that is tough. So if I could only do one, I would do 1inch. First of all, you have to kind of think of this in groups, right? So you have 1inch, you have SushiSwap, and you have directly on the project itself. So if I could only do one, first of all, I would do 1inch because I think 1inch is more undervalued, right? If we go to, right, SushiSwap is $2 billion market cap, 1inch is $500 million, right? So 1inch is a quarter the size of SushiSwap, and I think so. I'd rather have those tokens because they're more undervalued and can appreciate more. But however, right now, I'm really liking Amar. Low market cap plus the tokens I'm earning are in Amar, not in 1inch, because 1inch, despite being good, is $500 million market cap. SushiSwap is $2 billion market cap. So those tokens, they're already large, but Amar, 30 million market cap, right? And this can 10x, and I'm earning in their tokens 230%. So imagine I earn, so in a week or so, I've earned 1,700, right? Let's do some quick math here, right? Let's say 1,700. Let's say this stays like this, even though it's likely going to decrease. Let's say it stays like this for 4 months. That's $6,800 in a month, almost $7,000. Let's make it simple: $6,000 in a month, right? And let's say that's all I do. And let's say those tokens do a 10x, $60,000. Right? So that's the power of yield farming the right tokens. So if I could only do one, I'm loving Emma right now, Emma.fi. If I could do one other one, which I'm doing, it's actually Tornado Cash. So if we go to Tornado, so I'm actually doing both. So I'm doing Tornado on 1inch exchange. And I think Tornado this can do very well. I think this could be like top 50 market cap. So if we go to Tornado here, now it's 246 in market cap, right? So if we're going to 150, so basically I think this can do a 10x from here, honestly. I think Tornado should be over $1 billion in market cap, assuming everything stays the same, right? So basically I think this can go to 3,900, almost $4,000 price target for that. That's my opinion, not financial advice. So if it goes to $1 billion, that would put it, where would I put it? 75, 76 in market cap. So I'm thinking, is Tornado better than Digibyte? I think so. Near Icon, right? So I think it should definitely be top 100 market cap easily. Right now, because of privacy, and there aren't too many centralized exchanges listing it, but you have to factor this in, right? They have optional privacy. So you can be compliant. You can prove that this is your transaction if needed. So right now it's only on Poloniex, But honestly, to enter top 100 market cap, all it needs is 1 or 2 centralized exchanges. Actually, just one, because we're going here. Most of the volume is on 1 inch exchange, and then Uniswap. Yeah, Poloniex has nothing, but maybe because it's privacy coin. But if Binance adds this, I mean, to the moon and beyond. I think Binance could be like one. We need one central exchange to add this. I think then I think this can really move, right? But it's still done pretty well, you know. Can be better. It's up 90%, 91% in the last 2 weeks, but I think this is still very undervalued. But anyway, back to being a farmer, right? So I this on 1 inch at 70%. I'm doing it there, and then I'm also doing it here on SushiSwap at 107%, right? And then I'm also doing anonymity mining that I began this week or last week, in the last few days or so, right? Because it's still kind of hit or miss, but I think it's going to be worth it long term. So if you come here to tornado.cash and you go to launch the app, this is why I like Ethereum, because all these apps are actually running already. While Polkadot, great technology, but too early, right? So, sorry, just give me 1 second. Looks like it's, so I'll go through what what anonymity mining is. Basically, Tornado Cash is a Ethereum privacy mixer. You come here, you deposit your ETH, 0.1 ETH, 1 ETH, 10 ETH, 100 ETH, and you send it there. And then it sends it to a different Ethereum wallet address, and it breaks the transaction so nobody can track you. So very good for privacy. But if you need to, for compliance, to show, hey, this is actually me, not just some random address, you can always prove that using on-chain data. So, but the way that the mixer works is they have a pool. That's why the amount here to deposit is fixed. It works for ETH and stable coins. But basically they have, let's say they have a pool of Ethereum, basically a smart contract address. You send ETH to it in batches. So each pool, so let's say there's a pool for 100 ETH, and this pool has $500 million worth of ETH, right? But each transaction is 100 ETH. That's how, so they make it hard to track, because let's say it's 500 million divided by 100 ETH. Those are the number of transactions you have to go through and track manually if you're trying to track somebody down. But they're all the same size, so it becomes a pain, right? So they're mixing everything up into one pool, and then they have a different smart contract pool with the same amount of money that they then use your money to a new totally random address you make up or you create. So there's no hop connecting this transaction to your withdrawal. So you deposit into a pool and you withdraw to a different address. That's how you become basically private through this. Now, to make this work, they need lots of money in each pool. So in this pool, and this pool, and in this. So what I did, just to kind of test out and try the liquidity mining, the anonymity mining, I deposited 10 ETH because 100 ETH was just too much. I mean, because the incentive they have to incentivize people to add liquidity to their mining program is kind of like a lottery. Not a lottery, but the amount you earn is not fixed. So if we go to, there's actually a blog post on this. If I could find this, that's why it's kind of confusing, but I think it's going to be worth it. Basically, you have 1 year. The incentive program runs for 1 year. It's hard to figure out. It's based on how many people deposit, how many people withdraw, right? It's based on this formula. So where's that? Yeah, anonymity mining. If you just go to their last media post, it kind of describes it. Basically, they're giving out this amount. So you deposit your Ethereum, and they issue you a different token called AP. AP. So in this case, they're giving out 50 AP per block if you deposit 10 ETH, and they're giving out 400 AP per block if you deposit 100 ETH. But I mean, that's a lot of money. That's what, 200 grand almost. Yeah. Basically, once you do that, you then have to convert. So let me go back here to the dApp. So basically, you deposit 10 ETH. They then give you a secret key, which you have to store somewhere secret. Whether probably more like, I would probably recommend storing it on a USB drive that's encrypted. Actually, one I recommend, I don't think I have it here with me. Yeah, I don't have it with me. But basically, you can encrypt it either using software or just through, just buy like those hardware encrypted USB drives, or just even a hard drive. You store that somewhere safe. Once you do that, you come here to mining. You basically come here, you go to mining, and so let me go through what I did. Right, I added 10 ETH to this pool. It gives you a secret key, a long hash password, basically. That's just for you. Nobody else should have this. Otherwise, they basically have your private key and can take out funds. Once you store that somewhere safe, then you basically are now in the rewards pool and you're earning AP tokens. So whenever you want to come out and withdraw, you have to then go withdraw your funds back. So you put in your secret key. It's basically coded in a note here. You put in a address. It could be any address you generate using your Ledger or MetaMask or whatever, wherever you want to send your ETH to. And it sends that. Then they take the amount of time you added liquidity to their mining program. So in this case, let's say you do it for a month or whatever. You come here. And where's the formula? Yeah, so here's their formula, right? So for their, it's kind of complex, but basically they're taking, so the virtual currency is the amount of TORN they've allocated in the program for mining times the blocks and the duration you're in, minus how much other TORN tokens other people have withdrawn, right? Then they go through all this, right? But basically, from following the Telegram group, I think the APY has been fluctuating. Actually, let me see if I can find out what the API has been. So that's why kind of being in the Telegram groups. So if you go to the Tornado Cash Telegram group and just search for APY, people have been keeping track on what the reward has been. Okay, so last message I'm seeing here on the 16th, APY was basically 190% APY in TORN tokens. So somebody was saying is paying out 6,500 per week. I'm not sure if that's to everybody or just to him. Okay, this person says 100 Ethereum deposited for 7 days, generated 18 million AP minus relayer fee equals 17.8 million AP. Even at 1 million AP per TORN rate, we're looking at 17.8 million TORN per week, which equals 6,500 USD per week, or basically 340,000 per year. At current prices, that represents a 190% APY. So basically over 100% APY for being for joining the mining program. So I said, you know what? Let me dabble in this a little bit, you know? So I did. Now, because of the limitations of the program, I mean, 100 ETH is a lot of money, especially for something that's, because going back to the formula here, right? All this depends on how much, so it's kind of a gamified system. Yeah, so unfortunately, there's some irreducible complexity. It's impossible to know how much AP will get generated over the course of their program, since it's private. So it fluctuates. So, but after, basically, the way I'm looking at this is, don't be in this program past the 1 year, because otherwise, it ends. But I think towards the end, a lot more people will be looking to withdraw. Either way, though, the program I think is going to be lucrative, but it is kind of complex. That's why, once again, I don't think putting in everything makes sense ever. So basically, I like Tornado Cash. I know I've kind of been rambling, but I like it because if this stays at the same level, over 100% APY in their mining program here, and I'm also getting 107% through SushiSwap, and I'm getting 70% through 1inch. I'm getting money different ways, right? Passive income, multiple streams of income with one crypto. Now, obviously, I'm kind of hedging everything, right? Because this was the highest when I joined. It was 283%. However, it fluctuates. And then same thing with this. Like this is high now, but this could fluctuate and go down, and 1 inch could be higher, right? And then this, though, I think the anonymity mining program could be the most lucrative one. And that one, I think less people even know about that, right? So actually, maybe not, because I know I saw a message that they do have over 500,000. Because I shared this with our customers in our private alerts group. Let me pull this up. Like the on-chain data on Tornado Cash is very good. Lots of people were already using it, but let me find the message I shared. And so Blue Kirby, he's pretty popular in the crypto space. Worked with who was early in year-end finance, a team member or something. But anyway, he actually did a pretty good write-up on Tornado Cash on the investment thesis. Right, so we just pull this up here. So this got my attention on the mining program, right? Because when he posted this, currently Torn mining was estimated at 667% APR. Right now, this was posted on the 11th. Then obviously this cannot be sustained, but it fluctuates, right? So I think long term this could actually be higher as more people withdraw when the program is almost over. The rate could be higher to incentivize people to add even more liquidity. But anyway, the most recent number I would use though is probably the over 100% APR or APY. But anyway, pretty good argument or thesis for it. Obviously, I'm already bullish on this as well. So they've gone through 7 total audits. Vitalik is also bullish on it, active user of the protocol based on the tweets I shared earlier. But here's our on-chain data, right? So, okay, so deposits. Actually, this is probably good to bookmark for the mining program because you can know when try to game it. So looking at this, like on the 8th, $135 million deposited, 50 million withdrawn. Then here, 113 million, 70 million withdrawn. So you can actually use this. This is weekly though. You can use this to try to figure out the formula, right? Because here you know that T withdrawn is the amount withdrawn here, and then you have the block duration. This is the blocks, right? This is you're earning. Let's say you put 10 ETH, right? 50 AP per block. You put in maybe like a rolling average of the withdrawal number, or maybe the most recent one, and you can actually try to calculate this. And this we know was 1 million tokens over 1 year, right? So we have basically 1 million times the length, how many blocks you're in, and duration, times the amount, which is in this case, let's say 70 million, which then gives you this. You get this times all this other math. So I mean, it is possible, but requires some math. But I think the mining program can be very lucrative. So that's why I'm doing everything. So that's why I'm very bullish on Torn. Tech-wise, it's also good, and it can grow in value.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.